Well, yeah, those numbers are certainly better than private equity, but they also don't tell the true story because those numbers are much, much smaller when it comes to large-scale commercial real estate development, for example, or large-scale condominium development in places like, say, New York City, where those numbers are in single digits, for example. So what we have to do, I think, is provide access to opportunity. I think the biggest issue confronting women and minorities, especially African Americans, is equal access to capital. So capital is deployed discriminatorily because it's deployed in the most efficient way. So they go with the most seasoned developers. They go with the ones that have the longer track record and who they've done business with before. So it doesn't give opportunities for new developers. But that's where the opportunity for investors is. It's with new ideas, innovative developers looking for current solutions. And our industry has changed. And if you look at what's happening in the real estate market, all cities are not created equally. So New York City is struggling in the commercial office sector and the residential sector. But then you go to someplace like Florida, where I am today in Miami, and it's prospering. The office market's on fire. We're going to build 2 new office buildings down here in Miami Beach that meet the market. The residential home market is appreciated at over 35% a year. So what's happening here is 2 different places are having 2 different experiences. But places like New York and in the Northeast, to come out of the challenges, are going to need some new ideas. And women bring a different perspective, and African Americans do, and they have new ideas. And I think that the investment community loses opportunity by not backing them.
I know we want to get your broader thoughts on the commercial real estate and real estate market as a whole. But first, I just wanted to follow up with you on kind of solutions to this capital allocation problem. Is it technology? Is it certain quotas that you think allocators should be abiding by? What's the best way to really change this situation?
Well, I think if you look at the top investors, first of all, there's $69 trillion in venture capital and private equity right now as it stands. And less than 1.3% of that capital is deployed by firms founded or run by women or people of color combined. So that means that 98.7% of all venture capital goes to white men. So that has to change. And the biggest single investor in private equity are public employee pension systems. And so they should mandate that investments are made reflective of the population demographics of their marketplaces and who's contributing the money to those public employee pension systems. That's the first issue. And then the second one is any public-private partnership, be it Hudson Yards, be it what we're going to do at Affirmation Tower, what we do around the country, anyone who develops on public land or gets public dollars needs to have a mandate for inclusion for women and minority-owned businesses and consultants and talent. And our company, for example, is committed to 35% of all of our contracts for our over $5.5 billion of developments currently active to go to minority and women-owned businesses, and we're going to exceed that. So I think it has to be affirmative, aggressive steps, because women and people of color, especially African Americans, have started off with such impediments that the only way to rebalance it is to make some aggressive steps towards that, not at the expense of quality, because there's super talented women out here, super talented people of color out here who have compelling investments and just can't find the capital.